Note down in the comments about which Indian FMCG stock has no product but still is worth over 1 trillion rupees. Here are your hints. On 28 March, this firm completed acquisition of South African bottler BevCo and its subsidiaries. This will open 5 new markets in the soft drink loving African continent, and the firm expects to spend nearly 3600 crores in FY24 to increase its production capacity. This will allow the firm to diversify from Pepsi to juices and dairy products. किसी भी वैल्यूएशन से आप देखो तो ये ओवरवैल्यूड है. इसका प्राइस 500 to 600 होना चाहिए था, पर फिर भी 1300 पर ट्रेड कर रहा है. इक्विटी रिसर्च एनालिस्ट तो बोल रहे हैं कि ये 1700 तक पहुंचेगा विद इंटरनेशनल बिजनेस ग्रोथ, कैपेसिटी एक्सपेंशन एंड हाई रूरल पेनिट्रेशन. इज दिस द राइट टाइम टू इन्वेस्ट इन दिस फर्म? तो शुरू करते हैं एक unbiased analysis just based on facts on Pepsi's bottler Varun Beverages Limited. My name is Ashish Thomas. I am graduate and a management consultant. My daily job is to evaluate firms, understand their risk and anticipate market moves. And I thought, why not apply all of it to the stock market? So here we are, and let's jump right in. The first thing we do is to understand company's business model. With 25 plus years of operation, Varun Beverages or VBL is Pepsi's top 3 franchises in the world outside US. The company has 3 main product segments across 9 categories. First, it is the carbonated soft drinks, which contributes to 71% of the portfolio volume, with soft drinks like Pepsi, 7-Up, energy drinks like Sting, Club Soda, and carbonated juice drinks. Second is the non-carbonated beverages, which contributes to nearly 25% with fruit pulp drinks like Tropicana, iced tea under Lipton, sports drink under Gatorade, packaged drinks under Aquafina, and in-house dairy-based drink under the Cream Bell brand. And third, they also manufacture food products for Pepsi with Kurkure in India and Lay's or Doritos in Africa. With the BevCo acquisition, it's expected to add another 4 product lines into its mix. अभी तक VBL को इंडिया के 27 states and 7 union territories में Pepsi products का franchisee मिला है. And India's geography contributes to 80% of the entire VBL revenue. बाकी इनका revenue international markets like Nepal, Sri Lanka, Morocco, Zambia, and Zimbabwe से आता है. Apart from the BevCo acquisition, VBL has incorporated a new subsidiary in Mozambique for distribution of beverages. It has also acquired a stake in Lunarmec Technologies, which manufactures plastic caps and seals for VBL. In terms of capacity expansion, VBL has now new production capacity ready in 2 sites and expanded its capacity in other 6 factories. This 45% estimated rise in capacity is ready just in time before the summer season hits, usually the time when the beverage sales are the highest. Now, there are 3 things that gives Varun Beverages a competitive edge based on its current strategy. Varun Beverages is part of the $15 billion plus Jaipuria Group, which also runs the listed firm Devyani International of the KFC India Pizza Hut fame, and owns Pearl Drinks, which manufactures the PET bottles. So the group owns each component of the Pepsi bottling and its subsequent market also, which provides a very good cost and revenue visibility to VBL. It has a symbiotic relationship with Pepsi. The firm has had a long history with Pepsi and has grown from a 26% contribution of sales in 2011 to 90% of contribution in Pepsi sales in 2023 within India. It has a right to manufacture Pepsi till 2039, so unlikely to see another firm break in this space. VBL also knows the Indian market better and strategically enables Pepsi in underserved areas, example the Bihar manufacturing expansion to serve a predominantly Coke market. Finally, the strong supply chain management. With over 39 manufacturing facilities, 120 depots, a 2,500 vehicles owned fleet, over 2,500 primary distributors, 35 lakh outlets and 10 lakh busy coolers, VBL's on-ground infrastructure remains a key driver of company growth. VBL also maintains a store addition guidance of 4 to 5 lakh outlets per year, driven by the distribution reach in the rural markets. Any new entrant will not have the synergies, the distribution and the end customer partnerships to give a major challenge to Varun Beverages at the moment. With this, let's take a quick look at the financials. Before we go there, आपने काफी सारे stock videos देखे होंगे, but very few go in the kind of depth like we are going today. So please go like the video अगर you haven't already and do subscribe. वहाँ bell icon होगा, all notifications click कीजिएगा so that you're up to date because there's one new stock analysis coming every 3 days. We'll use December 2023 numbers for this. Varun Beverages reported a 20% growth in revenue with an 18% volume growth year on year. This improvement can be attributed to a better product mix with new product introductions and higher revenue per case in international markets. Despite the increase in cost of sugar, which we had learned in the Balrampur Chini video, the company still ended with an improved EBITDA margin due to softening bottling costs and operational efficiencies. In line, the company profits also increased by 22%. Some more insights for you. The firm completed a capacity-driven capex of 2,100 crores in 2023 and has planned for 3,600 crores in 2024, of which 600 crores is for the international markets. According to the management statements, once all new plants are operationalized, the revenue potential is expected to double in the coming years. Net debt increased to 4,700 crores in 2023 from 3,400 crores in 2022, an increase of 38% due to the growth capex. However, given this is for the capacity expansion, the debt is good as long as it can be controlled, for which the interest coverage ratio is 11.4x, which means the firm can easily pay back the interest for the year. The return on equity is 34.2%, which is almost 2.5 times the industry average. From an equity research analyst perspective, they are anticipating a 15 to 20% upside on the stock with revenue growth of 20% and profit growth of 24%. All bullish from a distribution expansion, capacity expansion, entry into new territories and products, and a strong financial position. Finally, the promoters are the largest stakeholders at 63%. The shareholder pattern is stable with no insider selling. FIIs have marginally decreased the stake by 1% from September 2023 to December 2023, but still the percentage is higher than its position in March 2023. With that, a view on its risks. पहला consumer preference risk है, with लोग being more conscious about sugar-aided drink consumption and वो avoid कर रहे हैं actively. दूसरा, high dependence on Pepsi है, so any change in relationship can impact Varun Beverages directly. तीसरा, expansion risk with Africa. अगर वहाँ business disruption होता है for any local government instability के कारण, उससे VBL का काफी impact होगा. That brings us to the valuations. On the football field, equity research analysts are claiming that the share will be hovering between 1520 to 1780, predicting a huge upside to the share. अब इसका relative valuation is an issue. The PE of VBL is 85, with the industry median around 30. अगर आप EV by EBITDA ratio भी देखिए, तो that is around 49 with the industry median of 20. So the relative valuation तो बहुत कम है, between 597 to 679. The book value is only 53 at the moment. अगर DCF देखें, which is the true cash valuation, the company is between 680 to 890 at a WACC of 10.5% and a long-term growth of 6.5%. So net, the stock is overvalued. So it is not a value play at the moment. Final thoughts. अगर आप लोगों को वीडियो अच्छा लग रहा हो तो जरूर लिखना what is the next share you want me to look into, and do not forget to click the bell icon to get all the notifications. The goods: position of an exclusive Pepsi manufacturer, geographical expansion to Africa, supply chain expansion, and new product introductions make it very attractive. The risks too are business as usual, which impacts every FMCG company. However, the valuations are too low to justify the current prices in the market. With this, my opinion is one must look beyond valuations, especially for monopoly stocks like Varun Beverages. As India and broader Africa continues to grow, the consumption demand will continue to increase. The firm too is able to adapt by introducing new product or prices or SKUs to match the evolving consumption needs. If you have an appetite for moderate risk, you can keep accumulating the stock on every market dip. That's all from me today. Do note that I'm not SEBI registered yet. This is my independent views and analysis. Please use this research as a starting point in your own analysis and let me know about what you think about VBL as a share. Thank you.